Hello guys, I'm Joseph here again. Welcome to another edition of my weekly video. I'm actually going to be doing a little training in this video, and that's something I haven't done in a while. So because of some of the questions that some of you have asked me on how I'm able to just look at a chart that's so random and be able to see or be able to draw an advanced pattern from nowhere, and the obvious answer is it takes nothing but practice and practice and practice. But there are some people out there who don't really know how to go about practicing those chart readings. So my aim in this video is to try and point some of you guys in the right direction on how you can perfect your chart reading when you're trying to identify these patterns. But obviously, in order for this video to be useful to you, you need to be able to have some sort of a knowledge about price action and also know what a bullish, bearish, or sideways market is. So what I'm gonna do is, first of all, is I'm looking at my chart on the pound dollar. So what I'm gonna do is I'm gonna scroll over and try and find an area of a chart where I see some sort of consolidation or sideways movement, because obviously, as you guys know, that's where you're likely to see some of these advanced patterns. So the first thing I'm gonna do is, so right here I can see that I've got this is a part of a chart that it's sort of it's random really, like there's no some sort of movement, like, you know, there's a sideways market. And the first thing I'm gonna do is I'm gonna start drawing some lines, and this might not seem like, you know, it might not make sense to you at first, but you just bear with me and stay with me for a second. And obviously the main point I'm trying to make is the reason I'm drawing these lines is because, as we know, for every single advanced patterns, the starting point of any advanced patterns is impulse legs. And what these lines are going to do is, as you can see, I'm drawing the lines from the highs to the lows. So each and every single line I'm going to draw on this chart, it's going to be an impulse leg in itself. So I'm going to draw it all the way through, just, you know, from the highs to the lows of a certain trend. So as you can see there, back down here, and then we had a little retracement, and then move back down, go ahead and move there, back down, all the way up here, and trust me, some people might be saying, what the hell is this guy doing? But guys, when I get to the end, you're gonna see how all these things are gonna make sense. Yeah, I think we're out of a consolidation from this point here, that the market gave us a little retracement, back up. Yeah, so now we're putting a bullish move. Now the market is trending, so I'm gonna stop here, and I'm gonna go back to where I've started, where I drew all my lines. So basically what I'm gonna do with these lines that I've drawn is, so like I said, each and every single one of these lines is an impulse leg in itself, because it's being drawn from the highest point to the lowest point of a certain trend. So obviously I could go ahead and label this the highs and the lows, but that's just gonna take a lot of time. So what I'm gonna do is, the next thing I'm gonna do is I'm gonna connect these highs and the lows together, and I'm actually gonna use a different colored line, probably red line. So what I'm gonna connect here, what I'm gonna do is I'm gonna try and connect the highs and the lows in order to form a triangle. And what I'm gonna be interested in, like, I'm only interested in an impulse leg that has a retracement of not any more than 786 retracement. And what I mean by that is, actually, before I make that illustration, I'm gonna have to, yeah, so what I mean by looking for a retracement that's not more than 786 retracement is, so for example, if I bring up an impulse leg like this, and let's say we've got our X point down here, and we got our A point down there. So as we know with the Fibonacci tool, if you're familiar with it, if you're looking at the retracement of the X to A leg, so as you can see, we've got a bunch of retracement lines. We've got the 23.6, we got the 382, the 50%, 6.8, and the 786 retracement. So the retracement I'm going to be looking for when I'm trying to connect my triangles, I'm going to be looking for any retracement that's not more than, like, it's not, I'm not interested in retracement that comes all the way deep to the 786 retracement. And the reason is because there's no pattern that I trade that has a retracement of 786 retracement at the B point. So I'm not interested in any connecting triangles that come all the way, you know, from the 786, 886 all the way down there. I'm not interested in that. I'm only looking for retracement that's going to come into the 382, the 50%, or the 618. So basically any retracement that's just halfway point between X and A, that's what I'm interested in. So I hope that makes sense. So let's go over to the chart, and then, so here we are. And just to make that example clear to you, is because so if I'm going to connect these triangles, so I'm going to connect these two triangles right here. This connecting these 2 points gives me a triangle, but I'm not interested in this because this retracement, because looking at this impulse leg, oops, because looking at this impulse leg from X to 8 point, this retracement comes all the way down, you know, almost touching X point. So I'm not interested in that. Don't worry guys, just bear with me. It's gonna start to make sense to you in a second. So I'm flipping over, moving over. Okay, so this is the first point. I'm gonna start drawing my line, connecting my triangles. So from this point to this point, what do I see? I've got a retracement. I don't know what retracement this is, but I know it's definitely not more than, it's not even, it doesn't even touch the 786 retracement. So let me go X to A leg. So we can see that the market coming to the 618 retracement, we didn't touch the 786. So this is the kind of retracements I'm looking for. That's the kind of triangles I'm looking to connect. So moving on to the next one. If we connect one part of a triangle, we're gonna have to connect the other one, because connecting the other one, what does this give you? It gives you a shape of an advanced pattern, right? So now it doesn't mean that this pattern is valid, you know, until we use our Fibonacci ratios, until all the rules for every single point of this pattern has been met. We can't say that this pattern is valid until we use our Fibonacci ratios. But this is just something that looks like a Gartley pattern, even though, you know, we can clearly see that we've exceeded our X leg. So this is going to be a losing pattern. If it was a valid pattern, it would end up being a losing trade. But this is what I'm interested in. I'm looking at these shapes. So let's go ahead. We're going to connect from here to here. And like I said, told you guys, every single line is an impulse leg. So if I'm looking at this impulse leg from there to there, we got a retracement in the opposite direction. But that's the retracement I'm interested in. So okay, actually before I do the connect that lines, what I'm going to do is I'm going to complete this triangle, you know, form an advanced pattern. Yeah, so let's use green. So X to A leg, G to B leg, B to C, C to D. Okay, so let's go ahead and connect the next one. Connect this point and connect this point. So looking at the whole this second triangle, looks like a cipher pattern. So I'm going to use a different color. But obviously, like I said, until we use our Fibonacci ratios, we wouldn't know if this pattern is valid or not, right? Okay, so within this cipher pattern, we do also have another lines that we can connect. The second one, we can connect this triangle, and we can connect this one to that point. We do have another thing that looks like a Gartley or bad pattern. And same thing as the previous Gartley pattern. This would have been a losing trade, but we can see that we've clearly exceeded our X leg. So anyway, completing the triangle. So guys, I hope this is starting to make sense to you, because what you can see is, if you're able to identify the highs and the lows in the market, and you start to connect these triangles, you start to see patterns emerging. Now obviously not all those patterns are going to be valid patterns. So like I said, until you use the Fibonacci ratios before you can, because if you use that Fibonacci ratio, we're going to eliminate a lot of these patterns. Most of them are not even going to be valid patterns. You're probably going to end up with 1 or 2 patterns that are actually valid. So next one, let's see what we can connect again. So we can connect this long leg. So remember the first time we connected that one on the short retracement, but now if we're looking at this, the highest point to the lowest point, and then we connect this all the way there, you have another advanced pattern in the form of a Gartley. Looks like a Gartley pattern. Or bad pattern actually. We might not even get, I don't think we got the retracement, the 50% or the 6-minute retracement, so that pattern wouldn't have been a pattern anyway that I would trade. Yeah, so there it is. So we've got like 1, 2, 3, 4 different patterns right in this chunk. Now obviously, like I said, once you use the Fibonacci tool, you go through a process of what I call a process of elimination. You're probably going to end up with 1 or 2 patterns that are actually valid patterns that you could have traded. Yeah, but obviously this happens a lot when the market is in consolidation. So it's actually a lot easier to spot the patterns. So that's why I say, you need to have some sort of knowledge of price action and know what a bullish, bearish, or sideways market is. Because until you know that, then it's very hard for you to know what you can, what you're looking for in the market. So moving on, like I said, I'm not gonna touch on what's it called, the trending markets. Obviously, if I go up, we do have a potential cipher pattern that's actually on the verge of completing, but I'm not going to show you guys. I'm more interested in the sideways market, so I'm going to flip over to the next currency pair and try and do maybe a couple more, one more example, and then hopefully, like I said, guys, I don't know if this is going to be useful. This is just something that I just thought of. I was like, okay, let me try and share it with you guys. If you do find it useful, then please by all means, leave a comment, and I will see. Maybe next week I'll try and give you some more examples as well. So looking at the Euro Yen right now, I'm switching this to the 15-minute chart, because what I can see a lot of junk on the 15-minute chart, some randomness here. So we're gonna apply the same process that we just finished applying right now to the pound dollar. So let's go ahead and draw our highs and lows. Highs and lows. Got a retracement here. Oops, we had a long spike right here. Anyway, so anyway, I'm not gonna go too far ahead. So what I'm gonna just concentrate on this area. And like I said, what I'm gonna do is the next point is try and connect these highs and lows. So let's bring in our red line. So let's connect that high. Like I said, I'm not interested in the first one because the retracement, we can see the retracement is way deep, has already exceeded our X point. So I'm not interested in that. I'm looking at that point, so straight away I've got something that looks like a bad pattern here. So moving on, I'm gonna connect the next one. If you connect this, we've got something that looks like a cipher pattern right here. So we could connect this to this, but I'm not sure if this retracement is more than the 382 retracement. But then again, that's why I said we're gonna have to go through a process of elimination if you're gonna be able to rule these things out. So if I look at this retracement, we didn't get, we haven't got a 50% retracement. This wouldn't have been a valid pattern. But then again, a process of elimination. So let's see. This is our bad pattern. And what next thing that looks like a cipher pattern here. So yeah, that's how it is, guys. I mean, you can just move along. If you just look at a market in consolidation, you do this type of things, it kind of helps it now. But obviously, like I said, it's until you use the Fibonacci rate, Fibonacci tool, and until you're familiar with all the rules that make up a particular pattern. Once you know all those facts, then it's easy for you to just rule out any patterns that is not a potential, that is not a valid pattern. But obviously, like we know, with advanced pattern, it's all about being able to sort of predict the pattern before it actually completes. So the facts, what I'm going to do now, I'm going to move on to another example where I'm going to show you guys a pattern that hasn't yet completed, and I'll show you guys ways in which you can just sort of make predictions before the market even happens. So you know, it's a way of trying to stay ahead of the market, but I'm going to do this on a higher time frame, and I'm looking at the Aussie dollar. And so what I'm going to do is, why is this in? Yeah, so I'm looking at the Aussie dollar here right now. So I'm going to show you guys ways in which you can just, you know, predict what the market is going to do, and all you have to do is wait. So the first thing I'm going to do is I'm going to draw from all the way to this high to this low, and then my next impulse legs from this low to this high. And right now we're currently on the verge of forming another impulse leg. So until we get a retracement, until this market comes here and terminates and get a retracement, then we can't say this is this impulse leg has been completed. So what I'm going to do is I'm going to complete the first part of the triangle. So from there to there, I'm going to change that to red. We got our first part of the triangle. So now the question is, obviously this looks like a Gartley pattern. Let me see. Hopefully we didn't touch the 786 retracement. No, we didn't touch it. So we do have valid Gartley pattern, X to A, A to B. Everything here, you know, forms a valid first part of the triangle of a Gartley pattern. So the next thing to ask, the question to ask yourself is, so what next? How are you going to end up forming the next triangle? So now the question is, you can see that the market has come into a little bit of support right here. So if this market respects this support area, the next thing that you expect to happen is you expect to get another impulse leg that will terminate somewhere there. So if you get an impulse that terminates there, that's going to complete your Gartley pattern for you. So obviously once this market respects its support, the next thing that you have to do is be able to predict that this market is going to come in to complete your Gartley pattern. So X to A, let's look at, we're looking at this 127 extension, so we can see that like just a little bit higher. So this is what your next move should be, to predict that the market is going to come in and complete the Gartley pattern. But is it going to do that? No, you don't know. There is also another possibility, because look what happened here. If we go ahead and connect these two triangles here, now we got a first part of a triangle here, and this looks like a 50% retracement. So you got a first part of a triangle of a bad pattern here. So the next question is, if this market comes here and terminates there, you would expect this market to form the second part of the bad pattern, the second triangle. So we're gonna get the market comes back here, maybe, as long as it doesn't exceed that point, that A point, that would be your A point of a bad pattern, and you expect the market to come back down somewhere there and complete the bad pattern. And now you can complete your triangle. So this is how you can sort of stay ahead of the market, because this is sort of like whatever happens, this market is going to end up doing either going to end up completing the bad pattern or completing the Gartley pattern. But yeah, so it helps. I mean, I don't know if this is going to help you guys, but yeah, like I said, if it does help, you know, just let me know, and then I'll try and do more trainings on that. But obviously it's going to take a lot. You have to perfect it, you have to practice a lot, you know, you have to be able to know the highs and the lows, you know, be able to, because it's all about, you know, advanced pattern is all about seeing something before it happens. I mean, it's easy just going through a chart and, you know, looking at, oh, this was a godly, this is a bad pattern. It's easy to do that. I mean, it doesn't really take much skills to do that. But to be able to see this, to be able to predict that this is what's going to happen, you know, it helps you stay ahead of the market. You know, where you can plan your trade. You know, you can, if as long as the market doesn't get there, you're not going to trade. I mean, all you have to do is just wait for the market to do what it's going to do. So anyway, that's the trading for today. And so what I'm going to do is I'm going to show you the results of my signal service this week. It has been an uneventful week, to be honest. I mean, we did ended up a little, first week of May, a little 18 pips down, but it hasn't really been. I mean, we've taken, you know, five trades, but, you know, I think the NFP had an impact on the last 2 trades that we had. So anyway, let me try and see if I can show you a couple. The video is running too long, so I'm gonna just show you a couple of the a winner and a loser. Okay, yeah, that makes sense. So the loser, I'm gonna show you the biggest one, which is the USD CAD. We had a cipher pattern that ended up being stopped at this is it. This is the cipher pattern that we had on the USD CAD. Ended up being stopped at for a loss of about 69 pips. So let me just show you guys. It was on the 1 hour chart right here. So this is the pattern. The market came and, you know, it just never reversed, you know, filled this in, and then, you know, it just went up, ended up stopping us out. So what the next, and I'm gonna show this winner, the pound yen, the godly pattern, and the pound yen. Was it a bearish godly? Yeah, it was a bearish godly. So pound yen, let me flip over to the pound yen currency, and it was on the 15-minute chart. So there it is. So this was the bearish godly that we had. Where was it? Pound yen. Yeah, this is the bearish godly. That was what happened. The market came, filled this in, you know, rolled over, hitting our first and second target. So as you can see, I've got all the charts here, all the trades, but because this video is running too long, and I hate, you know, over 20 minutes, it's not really. I'd like to keep my videos below the 20-minute mark. So I'm just gonna, you know, stop right here, and obviously, as you can see, guys, you know, it's right. It's all right there. I mean, it's there. I mean, it hasn't been, like I said, it's more like a break-even week. I mean, even though we ended up losing a bit, but yeah, we just move on to the next week and see what happens in terms of our equity curve. So you can see, yeah, we had a, you know, we're still in the process of coming out of the drawdown. I mean, last we had a, you know, a nice, you know, pop back up, and now we've given something back a little bit, but we're still on around 5.5% returns for the year. So obviously, yeah, we'll see how it goes. But like I said, yeah, we'll see how this week goes. So anyway, that's it for today. Thank you guys for watching. Like I said, I mean, if you like, you know, all the training that I've done today on in trying to sort of identify or read advanced patterns in the chart, then please, you know, your comments, your feedback is always appreciated and always welcomed. And until next time, guys, I hope you have a good trading week. Thank you.